WeWork, ticker WE, is up 17% as we're recording this video, but what are the key levels and what do we want to be paying attention to on this stock? So firstly, just want to know, there's a lot of stuff happening in this company that's going to lead it to be quite volatile. So firstly, you see TAPS directors after board resignations about bankruptcy. So again, that's going to obviously create volatility. You're also seeing their bondholders shift into sell mode, again going off concerns. Again, that's going to be related to that bankruptcy. And what you're also seeing is shares are now trading higher with retail investors' interest. So again, you're probably never going to see like what we saw before with GameStop, AMC, because now institutions kind of are prepared for a bit more of the retail traders if they do go in. Again, retail traders, very small part of the market, so very rare that they did move things, but in the case of GameStop, AMC, again, funds are usually a lot more prepared for this kind of thing, so they don't get squeezed out of positions, or at least reducing the chance of that. So I wouldn't be looking for a full-on squeeze like you ever saw in those stocks, but again, we've been seeing this kind of company. You saw it on Yellow Corporation quite recently, or Yellow, I think it's Yellow Corporations, quite recently. This stock did that same sort of move off this bankruptcy news. So again, if the likelihood of this bankruptcy becomes on WeWork, we could definitely see that sort of move, because for some reason the retail traders seem to love these sort of bankruptcy companies. But I guess there's a lot of risk on them, but I guess there can be a lot of reward in the chance they do move. Like even today, 16%, you're not getting that on the large caps unless maybe off an earnings release, but this can happen quite commonly on these kind of small caps, which I guess gains the interest. But what are the key levels that we're paying attention to anyway on a company like WeWork? So if we push up, our first resistance is at 49 cents. That's our 6-month first deviation. So from current price, that still requires a move of 128%. So still quite far off before we start coming into overbought territory. And again, the reason it's going to take us long to come into overbought territory is you zoom out, go back 6 months, you were at $3, you then went down to 12 cents. You go out from a 1 year time frame, you were at $6. Down to 12 cents. So very volatile stock, has had massive sell-off, and again, that's why it's not something I really look to buy. I would only look to short if we get that upside momentum, because again, the 6 month and the 1 year are in massive sell-off mode. So if we do push up again, we got short bias levels 49 cents, 80 cents, 122, 194 and 250, and are all going to be those key levels where I'm personally looking to be very short bias on a stock like this. Again, potential shorts at 49 and 80 cents, but they won't be massive size, because there's a lot more likelihood if we do get some sort of a squeeze, we go through these levels, and I will take serious shorts from 122. Now, on WeWork, again, hard to borrow, and that will probably stay that way, especially as we get higher. So going to be hard to short the outright shares on this, because normally I would look to short the shares and buy the calls to define that risk. But in a case like this, where we may not be able to short the shares, we still have the options. So that means we can go through normally one or two routes, and that's either buy some outright puts if it squeezes, or we can look to trade vertical spreads, which again, it can play the downside, but you have defined risk and defined upside. So they're the two ways I'd be looking at trading this. Again, not something I'm looking to trade to the long bias. Yes, it could potentially squeeze, and if so, we miss out on that run, fair enough. But again, I don't really know where to have a stop if you're trying to get on in a potential short squeeze, and you don't know how long the money's going to be in the trade. So even if you're throwing, say, $5 in the trade, you can't use that for anything else. And that's why I don't like these sort of trades looking to jump in on the momentum. Instead, I prefer to get the downside move, because once the trade opportunity is there, we know, okay, if we do even short it with the options, we can get a month out on the expirations. If it doesn't work out by then, fair enough, we'll take a losing trade, go on to the next trade. But again, 9 times out of 10, these stocks will squeeze and they'll fall within a week or two. So that's normally how I look to trade it. That's what I'm looking at on WeWork. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.